Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you as always for making time.
Welcome back, Devin.
Thank you. Well, let's start with stocks on Wall Street, which closed lower last Friday as inflation slowed down but still came out higher than expected. The Dow off by 0.9%, S&P, Nasdaq by around 0.7%. What's the story in the global markets as we start a new week?
Last Friday, stocks turned lower after producer price data came in hotter than expected, disappointing investors who had hoped for signs of easing inflation before the Federal Reserve meeting this week. The S&P 500 fell 0.7% after wavering for much of the day. The Dow Jones Industrial Average was down 0.9%. The tech-heavy Nasdaq Composite slipped 0.7%. Data released over the past week have served as a reminder of just how difficult it is to call when inflation will ease, which would allow the Fed to pump the brakes on its policy tightening. Investors have been hopeful that Friday's inflation reading would offer evidence that price pressure in the U.S. are abating and would help solidify a smaller interest rate increase next week. In China, major indexes slipped amid a sharp drop in property stocks. Hong Kong's Hang Seng Index dropped 2.2%. In mainland China, Shanghai Composite retreated 0.9%. Japan's Nikkei 225 also shrank 0.2% today.
Well, Korean stocks were also lower today, led by the big chip makers Samsung Electronics, SK Hynix, and shares of Samsung now again below 60,000 won a share. Battery maker LG Energy Solution down about 2.5%. Tell us about the domestic market.
Today, domestic markets declined as U.S. inflation pressure is not lessened with higher than expected producer price index and fast longer interest rate hikes expected. A global economic slowdown this year and next year also limits the rise of domestic equity markets because Korea is one of the most foreign-dependent economies in the whole world. The benchmark Kospi dropped 0.7% and Kosdaq also shrank 0.6% today. In Kospi market, domestic individual investors and institutional investors sales continued from last week. In a narrowly trading market today, the combined net sales of the two investors groups were 55 billion won. Most of 20 largest market cap stocks declined today. Samsung Electronics dropped 1.5%, and second largest market cap, LG Energy Solution, also dropped 2.5% today. But the fifth largest auto producer in the global market, Hyundai Motor, rose 0.6% today.
Well, zooming out a little bit, Professor, according to the Bank of Korea's November report on the financial market, last month saw business lending, corporate lending, increase by 10.5 trillion won, about $8 billion. That's the biggest increase on record, especially large increase for the biggest corporations, while households continue to reduce their borrowing. What do you see happening with the debt situation in South Korea?
In November, domestic commercial banks lending to the corporate sector maintained strong growth. The fast growth of the loan to corporations has begun from October last month. According to Bank of Korea, loan to corporation increased by 10.5 trillion won on monthly basis in November. Of course, this larger loan to corporations is boosted by sustained demand for working capital at corporations and the continued use of bank lending from large corporations in large with the shrinking of the corporate bond market. The rise of loan to corporations indicates the shock of legal rent-linked debt default in early October still continues in domestic bond market, which can trigger larger real estate project financings. It became very difficult, therefore, to issue new corporation bonds because buyers' trust in domestic bonds are partially broken due to the Gangwon province government's withdrawal on legal rent-linked debt. So corporations are borrowing more money from commercial banks to finance their operation budgets around the end of this year.
Right, a major shift caused by that Legoland issue. Well, Professor, finally, this week, the Federal Open Markets Committee, as you mentioned before, will be holding its regular meeting. Seems like that'll see a 50-point rate hike, most likely. In Korea, we'll have jobs data, and the question being whether the recovery continues or not. What's on your radar, Professor, in the week ahead?
The largest event of this week would be, as you said, Devin, U.S. FOMC's key interest rate decision. U.S. key interest rate is, as of today, 4%. The path of Korean key interest rate for next year will be much affected by this week's FOMC decision. Market expects U.S. Fed will raise its key interest rate by 0.5% this time based on November's FOMC meeting minutes and the Chairman Powell's speech on 2 weeks ago on moderating the speed of the interest rate increase. Also, domestic employment in November is another important signal about Korean economy's recovery for next year. Domestic employment keeps its recovery momentum until last month, but recovery speed is reduced. It is related to Korean economy's possible recession amid high inflation. In last month, new jobs were mainly created in the manufacturing, accommodation, restaurant, and healthcare industries, apparently on the back of the eased social distancing rules. But we still see continuous weak employment opportunities for young workers. The employment growth was mainly led by those aged 60 and above, which accounted for massive 70% of the on-year gain. The new job additions for those in their 20s only came to only 4%.
Right. Well, Professor, we'll see what that new data show and catch up on that later on. Thank you, as always, for coming on the program. We appreciate your insights.
Thank you very much, Devin.